A bill in Texas passed another hurdle that would cap how much Bitcoin miners can participate in demand response programs. The bill, dubbed SBV 1751, passed the Senate with only one vote against and is now heading to the House. If approved, it will have to be signed into law by Texas Governor Greg Abbott. Joining us now to discuss mining and more is Griid Chief Strategy Officer Harry Sudock. Harry.
George, it's great to see you, my friend.
Good to see you. So what do you make of Texas SBV 1751 making it through another obstacle in the Texas Capitol? One step closer to law. Good, bad, indifferent?
I think that it's challenging. It's challenging for me to see the governmental forces that be pick winners and losers across an industry sort of unfairly. What I would have expected much more clearly would have been if they decided that demand response and the budget approved, by the state there, if that budget was shrunk overall, that would have made more sense to me rather than singling out a single industry and capping their ability to participate in the program.
Right. So speaking of singling out, you are intimately familiar with the mining ecosystem. So let's talk about the fear, uncertainty, and doubt that the New York Times has spread. Earlier this week, they put out an article, and you put out a tweet thread about it. What's your quick few-minute rundown on your retort to the NYT's investigative reporters landing on the conclusion that Bitcoin's real costs are big and not worth it?
Yeah, I think that, I think of the frame around this issue really in three layers. The first layer is really analogous to what you mentioned about, the Oracle of Omaha saying that Bitcoin's just not worthwhile. It's not valuable. It's not useful. The value and the utility of Bitcoin is obvious. Look at the market. The market determines the value of the good. And so we've clearly seen a secular opportunity for Bitcoin to grow in usefulness over the last decade. That's the first piece. The second is that, journalistic standards are an area of much discussion on this article. And I think that it was really a cherry-picked data exercise where the miners that they reached out to and the sites that they listed really were wrapped around a narrative that they had walked into that article to try to portray. I think that, certainly in the Riot Platform's response and the materials that they produced and the sharing of the direct answers that they gave in writing to the reporter tells obviously a very different story than what made its way into the paper of record. But what I really want to spend a moment to talk about is this idea of marginal emissions accounting and just the really dubious and novel nature of it. If I were, let's just say I owned a bank and I opened a bank and I hired 10 security guards and then $100 got stolen from the bank. I would expect $10 to be attributed to each security guard who was on duty during the lapse. What marginal accounting for emissions does is it says that every security guard is responsible for the full $100. And so really, there's $1,000 of liability, even though $100 was taken from the bank. And so what this is saying is that sort of the worst emissions profile of the worst unit from that perspective in the entire electric system is attributed to every incremental megawatt hour of consumption. And that's not really how it works. So there are quotes of numbers in the article saying, 90+% of the load is emitting, CO2 or greenhouse gas. The entire Texas grid doesn't have anywhere on it that has 90% emissions generation resources. And so it's very difficult to be able to attribute a number that high when that's not the nature of the physical electrical infrastructure that powers that entire electric system. So there's a serious flaw in the accounting methodology, in addition to the other kind of framed layers that we need to have conversations around to accurately represent Bitcoin mining and the role it plays.
Right. It sounds like we just need to have a more consistent way to discuss these types of things rather than just giving all the bad stuff to Bitcoin and giving all the good stuff to some other data center out there. I want to ask you a little bit about Griid. So you guys at Griid are a vertically integrated Bitcoin miner producing, low-cost carbon-free energy. That's the way you guys market yourself. Does the Griid team have a geographic focus? And what are you guys hearing on the ground directly from grid operators and utilities about your operations in spite of this NYT article?
Yeah, I think that it's really sort of the academic class that's paying close attention to the NYT article. The reality is that we hire, overwhelmingly from the military, the military and ex-military communities. these are people who are incredibly mission-driven and purpose-driven, and they found a very close fit between the IT systems at an Air Force base and the IT systems and needs at a Bitcoin mine. And so these are talent pools that we regularly look to all across our growth and all across sort of our staffing and hiring needs. And what we find is that certainly from those kind of communities and those perspectives, they're not interested in what the New York Times has to say about Bitcoin mining. They're interested in what a Bitcoin mine in their community can mean as it relates to fighting, the rising cost of electricity, the rising offshoring of jobs, and the ability to generate sort of above median income opportunities, right in their community. And we represent a positive across all of those types of factors.
Right. Harry, I want to ask you a little bit about just the mining market in general. Hash rate's at 360 exahash last I checked. Crazy growth this year, 30% is what I'm seeing. But sometime last year, the market for ASICs completely collapsed. What happened there? Did prudent miners then come in and scoop up cheap machines and start plugging them in? Was there something else going on there?
I think that there's some natural friction in the growth of the mining ecosystem, which is that it's easier to buy an ASIC than it is to build an ASIC's worth of infrastructure. And so you got to keep in mind that all of these mining companies really look a lot like big construction projects. And those don't happen quickly. There's long lead time items, whether it's a big transformer, an interconnection, transmission across the electric system. There's big chunky pieces of friction in, if I roll out the Gantt chart for a new Bitcoin mine, there's big lead times and gaps in there. And so it's very hard to respond to point in time market movement, whether that's in Bitcoin, whether that's in mining profitability, or whether that's in ASIC pricing. The ability to build that infrastructure along the same time scale that the market moves is impossible. And so you're going to see a lot of leading and lagging between those two factors.
Understood. So, Harry, we saw a lot of public miners go through some difficulties in the past year, some poor treasury management, rising interest rates, capital misallocation. You guys at Griid seem to have avoided the pitfalls, but I have a natural question for you. Griid was supposed to go public via SPAC. What's the status of that? Anything to report? SPAC markets fell apart, capital markets are kind of at a pause right now. Anything to report there, or just business as usual?
Yeah, my ability to speak directly to that is limited. We're in the midst of our quiet period still. My only recommendation is that we continue to move through the process and we continue to file updated and amended, S4s and do all of our kind of public disclosure processes. What I would point to, which is, outside of Griid, but it is a bit of daylight, is that Bitdeer got through a public market process via SPAC just earlier. It was either late last month or early this month. And so we are seeing some thaw on the public market process for our industry as well as for our transaction type. And so, these are the things that we look to when we try to understand the broader environment. I think, we all as Bitcoiners have an obligation to have, a careful eye on what the broader market environment looks like. While we're not in this rising rate environment now, we seem to be kind of in this flat rate environment. I think that it's obviously more constructive than 10% inflation. And so, I remain, extremely, extremely excited to be working on Bitcoin and to deliver Bitcoin's usefulness and avoid, the roulette wheel for as long as possible.
Awesome. Harry, that's all the time we have for you today. So thanks for joining us. It's great to have you.
Thanks, George.
That was Harry Sudock from Griid.